I'm going to take you on a whistle-stop tour of Sharia Compliant Property Finance in the UK. The presentation will last 20-25 minutes, and then I'll have some questions at the end if there are any. If there aren't any, then I won't. So before we get going, let's just go through some points. Just a disclaimer, this webinar itself is for information purposes only and doesn't constitute advice. R3 Mortgages doesn't accept any liability for any errors or omissions, and we strongly recommend you to take professional advice from a suitably qualified individual regarding your own personal circumstances. Before we get on to the topic in hand, I just wanted to give you a bit of an overview with regards to the UK property market and where we are on the 13th of September 2020. And it certainly has been a roller coaster this year in many forms. Now, over the last few years, the property market in the UK has generally been dealing with a lot of uncertainty following Brexit. At the beginning of this year, we thought we had a roadmap ahead, and towards the end of January, early February, we were starting to see people coming back into the market. There seemed to be a little bit more confidence returning, and transactions seemed to be increasing further from there onwards. And then we had what we all know that we had, and in the property sector, everything generally tended to stall, especially during lockdown. And a lot of the banks retrenched from the market, so there wasn't a huge amount of activity going on. Now, the banks were slightly worried. We'd never been in this position before. They're worried from a risk point of view, what's going to happen to jobs, how people are going to cope from there onwards. And one of the biggest problems that the banks actually have suffered is the ability to value their own asset. Obviously, during lockdown, when the valuers can't go out and physically inspect property, they're unable to give valuations to banks, which are ultimately able to use that to make their lending decisions. So, when we saw the lift out, the restrictions being lifted, and more important, valuers being able to go out and value property, personally, I was expecting a levelling off or even a slight tail off into the market. People would be scared, people would be sitting on their hands. Although we've been through many economic cycles before, we've never actually been in this position within the United Kingdom that a pandemic has kept us locked within our own homes and unable to continue with life as we know it. However, I was pleasantly surprised, because when the lockdown restrictions were lifted, the market tended to take a swing the other way. And especially for the last couple of months or so, a number of lenders, lawyers, brokers such as myself, we've been ridiculously busy, busier than ever in some occasions, as people come back to the market. And there's a few reasons, I think, why people are doing that. The first one is that while people have been locked down domestically, a lot of them have appreciated that if this does happen in the future, and especially this concept now that seems to be much more common to us, that might have been alien to some, is this ability to work from home. I think the whole pandemic has shown us that a lot of jobs where previously we thought we had to go to an office space to conduct our business, it actually is transpired that the need to do that during the pandemic has resulted in the ability to continue to doing that. So a lot of people are thinking that, wait a minute, I need more space at home if this happens again, or as my working pattern's changing. The interest in the base rate as a response to this by the Bank of England has made the Bank of England base rate and the cost of borrowing near some all-time lows. And factored into that is Rishi's stamp duty holiday, which, again, on my presentation, I still haven't changed it, says that it's going to expire on the 31st of March 2020, is 2021 actually. And ultimately, for people who are purchasing property residentially, and even for the investors, compared to what it was previously, they are actually making some savings. So there's been a momentous increase in impetus in the market, and from my point of view, long may that continue. Now, moving over to the Sharia compliant law and the Sharia compliant transactions, let's start off with, what is Sharia compliant finance? Well, ultimately, Sharia compliant finance is financing that, in the view of those who are creating the products and the scholars who are ultimately approving them, is in compliance with Sharia law. Sharia law being set out in the Quran and the teachings of the Prophet Muhammad, peace be upon him. Now, this webinar, and there's a debate that's gone on for a very long time between what is Sharia finance, is Sharia finance in the UK Sharia compliant, etc., etc. We're not going to be discussing that because each of the lenders have their own supervisory committees, which I'll come over to in a moment, and they actually make that decision. So we're going to be talking more about what the framework is and what options are available to you at this moment in time. Now, with the concept of Sharia compliant finance, riba or interest is not permissible. And going back to the Prophet's times, peace be upon him, the environment of where there was a lot of people who were taking advantage of people in desperate situations, let's use the term loan sharking, so to speak, I think the concept derives from that. And the way that Sharia finance differs is that there's more of a partnership or an element of sharing risk if you are entering into these types of transactions. So rather than money being created out of nothing, so to speak, there is some element of trade or entrepreneurship or something's happening there where the partnership has been created and there's an element of risk sharing. But the elimination of the word riba is one of the most pertinent points. Now, that's not to say that the bank or the lender cannot make a return, but in the course of Sharia compliant property financing, that return will be referred to as the rent the lender will charge, as opposed to a rate of interest. So let's just give you a walkthrough of how that works. So on a property transaction, you would partner with the bank. So if you remember, I was just talking about a partnership or a concept. You would partner with the bank and you would both contribute different prices towards the transaction. So let me give you an example. I've got a property that I've seen, it's on sale, it's for £100,000. I've got £20,000 in my pocket and I'm the purchaser, I want to buy the property. The bank in this situation would advance the other 80,000 or 80% of the transaction because I've met their requirements, and the bank would ultimately purchase the property and be the legal owner of the property. Now, over time, which has been determined and is the term of the financing, the bank will agree to sell me a share of that property over that period of time. Now, the parts that I don't own of the actual property, in return, I will pay a rent to that bank. And in most contracts, the rents are reviewed on a quarterly basis. However, you have got the ability to lock into some certainty with regards to the rates that are available. Now, over time, let's assume that I've bought this property that I want to live in. Over time, once I've made all those payments, let's say over 25 or 30 years, the whole property is then transferred over to you by the bank. Okay, so one of the main differences is that there's a partnership at the beginning. The bank becomes the legal owner of the property. You make your repayments each month. The part that you don't own, you're not paying an interest to the bank, you're paying a rent towards the bank, and then at the end of it, the asset gets transferred over to yourself. Now, with regards to each of the banks, they all have their own Sharia supervisory committees. So the bank will devise a product, a home purchase plan or a buy-to-let plan or something like that. And then ultimately the bank will present that to their Sharia supervisory committee, or the committee may be involved in the products being created or the template or the framework of how they're done. The bank themselves appoint the supervisory committee, and the supervisory committee is comprised of usually Islamic scholars, Sharia compliant financing experts, and it is common for some of these scholars to be sitting on the supervisory committees of a number of banks or financial institutions or lenders. And ultimately, it's the purpose of the committee to decide whether that particular scheme or product is in accordance with the Sharia principles. Now, if it is, and they are happy with it, then they will issue a fatwa saying that it is in accordance with the Sharia compliant principles. So each bank could have their own committees, they could have different people on them, and then somebody else could turn around and say, well, one thing is one thing and one thing is another. But as far as that bank is concerned, they will assemble this panel of experts and scholars, and they will be the people who are issuing the fatwa, giving the declaration of the compliance with Sharia law. Now, there are many different types. For those of you who have studied Sharia finance in the past, there's many different types of actual financing arrangements that you can actually have. And one that is commonly used is the diminishing musharaka basis. I can always struggle saying that for some reason. Now, on a home purchase plan, for example, let's say hypothetically, the property is acquired, you make your 30 years or 25 years repayments, and then ultimately you acquire the property themselves. That's an acquisition contract, okay? Because ultimately you repaying your rent payments and your monthly payments will mean that at the end of the transaction, you'll have repaid the bank and you'll ultimately own the property, which is how the residential property market works in the UK. Normally you'll do it on a 25, 30-year capital repayment basis. At the end, the keys are yours. Now, for the buy-to-let market, you may only want to make the rental payment back to the bank because you are planning for there to be long-term capital appreciation and you class this as an investment. And that's where the rent-only diminishing musharaka scheme comes in, because ultimately you're paying rent until the end of the term. Now, the mortgage process for Sharia compliant financing is very similar to that of if you were to take a mortgage from the high street bank. You would make the application to the lender, and if you hadn't found a property first, you would get an agreement or approval in principle. Once you'd found that property, and you'd then submit all of your documents to the lender themselves, and the lender would then assess it. If they're happy, instruct a valuation on the security that they're taking. If they're happy with that, then issue a formal mortgage offer. That would then be passed over to the lawyers, who at the same time would have probably be doing their legal work, and they will be drawing up the contract. But remember, essentially the main difference here is that the bank would become the legal owner of the property, and you would be entering into a partnership or a leasing agreement from them ultimately for your part of it. That differs from in the United Kingdom. Let's say if I went to a high street bank and I was to borrow the funds, where I would be the legal owner on land registry and the bank would have a legal charge on the property. So I wouldn't be able to dispose of the asset until the legal charge had been satisfied. So from that point of view, there's a similarity, but whereas I'm the legal owner on the transaction, the bank is the legal owner. Now, you can also, and this is where I really do see this maybe gathering some momentum in the future, you can also use Sharia compliant property financing for buy-to-let transactions. And this can be in the case of purchases, but also in the case of refinancing as well. So you're not paying, you're only paying the rent in this particular scenario. I'm sure you can repay the principal as well and do an acquisition agreement as we were discussing. But if you didn't, you're doing a rent-only agreement. This is because you believe in the future the price is going to rise or appreciate, and you only want to pay back the rent to the lender, which would keep the payments lower. Now, at the end of the term, you would need to decide how you're actually going to repay back the principal back to the bank. Okay, are you going to sell the property? Are you going to refinance it? Are you going to be disposing of other assets? Will you have cash then to utilize to pay off the mortgage? At the end of it, you will need to have a repayment schedule for when the bank asks for their money back. The other advantage is that you can also do limited company transactions Sharia compliantly as well, which obviously with the tax changes, a lot of people, especially high rate taxpayers, have been looking to put their purchases through limited companies. You've also got that vehicle to do it as well, should you wish to do so. Now, there are some very important notes or points that I want you to note on Sharia compliant property financing. So this isn't a new concept in the UK. This has been going on for a number of years, and entrants have come into the market and they've moved out of the market accordingly. You had very famously HSBC used to have an Amana finance range in the UK, and this changed over time. But in the last decade or so, there've really been some prominence of some lenders who are really putting down roots. They're here to stay, and they want to take a bigger slice of the mortgage market, and they want to take a slice of the mortgage market not just from Muslims. They're not just narrowing their scope to the Muslim population in the UK, which would ultimately limit their market. They're looking to increase it to literally the whole of the property market, and I'll come to that point in a moment. But the one thing you cannot do is you cannot compare the rates on high street mortgage borrowing with Sharia. You can compare them, but you shouldn't do Sharia compliant finance. Okay, I cannot recount to the number of times when I've been having this conversation with people, and either they've got existing finance or they've had it in the past, and I'm telling them what type of parameters the rates are at the moment, and they're telling me how much more expensive they are compared to high street financing. You cannot compare to the two, because you're not comparing apples with apples. Okay, high street banks have got a range of areas where they're able to obtain their funding and their financing, and it is going to be the lowest that's going to be available, in most cases the lowest in the market. The Sharia compliant lenders have got different mechanisms of how they're able to do it. They don't have the same access to the same financing, and in most cases, because of the nature of it being Sharia, they wouldn't be able to access it anyway. Their cost of financing is going to be much higher. So do not compare high street banks to Sharia compliant banks, because in my opinion, for the foreseeable future, they're never going to be able to compete. And I don't think that is a fair comparison, and that they should compete, because they're addressing two different issues. If you are doing a transaction using Sharia compliant finance, you need to make sure that the solicitors are familiar with how these particular contracts work. So the banks may provide you with a panel of solicitors that they use, or that they may make suggestions of. It would definitely be prudent doing that, because if you've got a solicitor who's never done one of these transactions before, and you're especially trying to move quickly and at speed, and they're not familiar with it and they're getting up to speed of it, I can't see that's going to put you at any major benefit of a lender who's doing these transactions in, day out, and knows how the market works. Okay. Now, another big advantage that I can see is that on a residential or buy-to-let transaction, there are no early repayment charges with this method of financing. So ultimately, if I bought a buy-to-let property and entered into a 5-year rate lock agreement with the bank and took the mortgage over 25 years, in most cases, if I did that, and I said not to compare, but comparing it with a high street bank, if I did that with another lender, if I paid that money back within 5 years, there'd normally be a penalty or an early repayment charge, which is usually a percentage of the loan amount outstanding. With these contracts, there are no early repayment charges, either with the HPP side or with the buy-to-let side for full repayment. So if you buy an asset and then decide you want to sell it or dispose it later on, where there may be penalties in other situations, there are no early repayment charges. And I think that's a big thing that people can use very effectively. The bank does not benefit from an increase in the property value. And this is another misconception that may be out there. Because the bank is the legal owner, if the property's gone up by 100 grand, does that turn into 100 grand for the bank is going to be benefit from? No, ultimately, you're going to be the person who's going to benefit from any capital appreciation in the property. Historically, there used to be a situation as well, and we're talking about a few years ago, where because the bank was acquiring the asset and then selling it back at the end of the term, there were two purchase and sell transactions ultimately, so there would be double stamp duty, but that's been eradicated a number of years ago. So when the bank does transfer the property back to you, there's not currently any further liability that needs to be considered. Now, useful points to note: a lot of the Sharia compliant lenders actually have higher loan to values that they would be prepared to lend than other lenders out there in the property financing market, and even others that aren't or don't market themselves to be Sharia compliant. So for example, on the residential side at the moment, most lenders are going up to 85% loan to value at present. And because of that, or there are some in the 90% loan to value market, but they're coming in and out. There are Sharia compliant lenders that currently are advertising that they'll go up to 90-95% on residential purchase transactions. Obviously, you'd need to meet the lender's criteria and tick all their boxes, but that is a lot higher than that's available conventionally. Also, these lenders generally don't tend to tier their rates as much, so that can be advantageous if you're borrowing a higher rate loan to value on your particular property purchase. On buy-to-lets especially, they have got their ability, or some of the lenders have got their ability to top slice income, and especially down here in London and the southeast, that's one of the biggest headaches sometimes, is that when you apply the rental calculation to a property, because we've got high property values and maybe lower yields, you're not able to borrow as much. Because they recognise this, if you personally are showing that you've got surplus income that you could utilise, that can usually be factored into the equation, which may increase how much you can be borrowed. So that's definitely an advantage. I also mentioned limited company buy-to-let lending and rental calculations. These Sharia compliant lenders are also very akin and versed to the UK expat and international residents who want to buy and invest in the UK. So for those of you who are currently UK nationals working maybe overseas in the healthcare sector, or if you are an overseas national who wants to purchase property in the UK, again, the Sharia compliant lenders seem to be catering for this market at present. So that's a very whistle-stop tour of Sharia compliant financing. So our contact details are on the screen as we speak. If you've got any questions or queries, you can by all means find us on there. Alternatively, visit the website or our Facebook or our YouTube pages. But if anybody has got any questions, I'm more than happy to take them now. Just type them into the comments section. No, we don't seem to have any questions. They could have all been on the earlier session. Okay, fine. Yeah, if there's no comments or any questions, then my name is Riz Malik. Thank you very much for joining us as part of our R3 Mortgages webinar series, where our aim is to inform, educate and inspire. Today we've been looking at Sharia compliant property financing in the UK. Please visit our website for other topics that we have covered in the past, or follow us on our YouTube channel where you can find more videos and content. Thank you very much for your time, and I hope to see you soon.